Hi there, welcome to Grain TV. I'm Kevin McNew. It's Wednesday, September 28th, another down day in the markets. Let's take a look at Grain Edge's trading platform and see where we closed. In Chicago, corn was off 2, beans was off 7, and wheat in Chicago losing 1.5 pennies. News today started out very positive with a big bunch of export sales announcements. First of all, let's start with soybeans. 2 deals announced this morning, one for 133,000 metric tons to China, another 211,000 metric tons to unknown. But the big number of the day was a 1.5 million metric ton, that's right, million metric ton deal to Mexico. Most of that, 1 million of that 1.5 million is for 2016-17 marketing year, but the other 500,000 is deferred to 2017-18. Nonetheless, the market took it on the chin with that news and traded lower, spending most of the day in a very narrow trade range. But let's take a look at this deal because I think this is significant in light of how large it is and how Mexico tends to be a fairly influential buyer. If we look at how big this is in retrospect to history, you'll see that it ranks as the number 4 largest deal ever and the biggest deal by Mexico. Mexico's previously big deal was in 2014, not surprisingly, around this same time of year in October, early October, around the harvest low. They bought 1.4 million metric tons. This deal done at 1.57 million metric tons. Now, ironically, when that deal was done in 2014, the market actually sold off on that day by 10 cents. Much like today, we closed lower even on this very bullish news, but the market did manage to rally beyond that 30 to 40 cents higher after that news. And so, I'm not saying this is the bottom here because certainly we still got a lot of harvest in front of us, but I think the dynamics are changing quite substantially between this year and last year in regards to our export situation. This deal by Mexico is a substantial deal, and it just sort of highlights what we have been seeing, which is very, very large exports of corn and beans, and even wheat is doing fairly respectable in comparison to last year. And what I want to talk about right now is sort of the export volume we're seeing at this early season or early part of the harvest season. Normally, early September to mid-September is a pretty slow time of the year, but this year in particular, this is the best first half of September we've had all the way back to records I have from 1990. It's the largest volume, cumulative volume of corn, soybeans, and wheats. This is the physical movement of those grains during this time of year. And what you can see, if you go back last year when things were so dismal, total corn and bean movement, corn being in yellow here and beans being in green, total movement in that first half of September was only around 700,000 metric tons per week versus where we have been so far the first half of September, which is over 2 million metric tons. Now that's a double-edged sword. On the one hand, it's obviously good that we're seeing very significant volumes moving here into the export market. But what it probably means is we are going to start to see barge rates and transportation costs really start to escalate more so than last year when exports were very dismal and very disappointing. I think this year in particular, we're going to see a much bigger spike up in the barge freight index or the barge cost index. And here we have St. Louis, and we're already starting to see signs that it's moving up. It's gone up from about 38 cents a bushel in St. Louis to just over 50 cents a bushel in the last week. And I suspect we're going to just keep moving higher, probably up into the 70 to 80 cent range, which probably means 20 to 30 cents down in basis levels along these river terminals. So if you're a producer, what this means is if you're not able to sell this grain off the combine, or if you have to sell this grain off the combine, chances are you're going to see very, very weak basis in the coming weeks, more so than where we're at today. We're already seeing soybeans really start to take it on the chin. We talked about it yesterday. Today, again, another round of bean weakness on soybeans along these river terminals, off 4 to 6 in most of the Mississippi, Illinois River locations. So we're already starting to see it really start to erode, and I think it's just going to intensify as harvest progress picks up. So keep that in mind as you move forward. On the other hand, on the demand side, it certainly is positive that we are seeing such strong movement. We talked about this last week. Corn export commitments year to date are 80% above last year, and this Mexico deal just keeps adding more and more ammunition to the demand side of the equation. Let's take a look and switch gears now to the South American situation. And obviously with our harvest going on here, the southern hemisphere is starting to get into their planting season, and there is some concern about dryness, especially in Argentina. Now, we're not in an official La Nina event. We are sort of stuck in that neutral zone, although meteorologists are suggesting it's starting to look more like a La Nina event is starting to materialize in terms of precipitation, especially in Argentina. Argentina tends to be the most impacted of the two major countries, Brazil and Argentina, when we do have a La Nina. Now, if you look at their precipitation so far, the line being the normal trend of precipitation for this time of year, and you can see the deviation in yellow here between normal and where we're at today. We're in Argentina quite a bit below normal for this time of year, but the forecast calls for some fairly significant rain events starting in about the second week of October. So those rain events are sizable and expected to turn this market, or turn the precipitation chart back to above normal. Now, so what that means is obviously those forecasts have to materialize, because I think right now the market hasn't put any premium at all on any sort of weather problems there. But if we don't see those rain events, then that could certainly get the bean market turned around. That's all we've got for today on Grain TV. Join us tomorrow. We'll be talking about export sales and setting the stage for Friday's quarterly stocks reports from USDA. As always, if you want to learn more about how we can help you in your own grain marketing situation, whether it's futures trading or whether it's cash market intelligence from our 4,200 grain buyers we're collecting every day, visit us online at grainhedge.com.
As a Grain Edge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.